So I just received an email from Capital One that states, during a regular account review, we've noticed that you've only been using a portion of your credit line. To better fit your card usage, we've reduced your credit line to $10,000. We've kept your credit line significantly above your highest balance over the last year to ensure that you can still use your card as you have been, while providing the flexibility for future spending. In this video, I'm going to talk about why I believe this is happening, what you can do to prevent it, and where we go from here. Welcome back to Mystery Money. My name's Nick. If you're new here and you're looking for money tips and tricks or ways to make your business run more efficiently, or you're just looking for some information about starting or growing a business, start now by hitting that subscribe button and turning on notifications so you don't miss anything. Originally, when we applied for our Capital One card, we received a $15,000 pre-approval. We were pretty regular when we were using it. Then we had a few breakdowns and almost maxed out the account. When I requested an increase, it was denied, and when I found out that it was also affecting my personal credit score, I changed to the Chase card. We still use this card, but only for small purchases like washer fluid, single tires, but I still like the availability of having the funds. This, in my opinion, is because we're about to enter a pretty bad period of time in the economy. I am no gloom and doomer, but all the signs are pointing to some pretty bad times coming. Several of the members of Congress have stated that they are not willing to provide any additional help to small businesses dealing with the current situation. There's mixed policies in place for restrictions and lockdowns throughout the world and in the country and even between states. With no current end in sight for this pandemic, it leaves a lot of uncertainty within the finance sector. In the last video I did, I talked about how it was getting harder to get a business loan, and you can check out that video here. What I believe we're seeing is the tightening of credit by lenders. This is all in effect to protect themselves. Make no mistake, banks only care about the bottom line and their shareholders. Anything they have to do to keep those shareholders happy, they're going to do it. If that means putting your small business under to do it, that's what they're going to do. They know that the first thing that happens when an economy is in trouble is that small businesses start to take on losses from vendors or other things like that. Just like in the early stages of the pandemic, the big box stores did just fine, while the little mom and pop shops had issues. The way that the banks work is that loans show as assets on their balance sheet and deposits show as liabilities. This is because you can withdraw your cash at any time, and if you think about a time in history like the Great Depression, that's what they call a run on the banks. Everyone went in, took all their money out. If banks lose their cash reserves and people stop paying their loans, the bank is going to go out of business. By reducing these credit lines, that means less money that the bank needs to keep on reserve to cover those losses. Banks are also preparing for rates to increase in the next few weeks. When rates go up and debt service on those lines of credit goes up significantly. Since those lines of credit are often tied to a variable rate like prime, if you owe $10,000, the interest rate is probably 15 to 24%, or could potentially be $1,500 to $2,400 per year just in interest. If your rate goes up 5%, that makes the payment jump to $2,000 to $2,400. I'm just using small numbers, but imagine if someone had a $300,000 credit line and that interest rate went up 5%. So let's talk about how to prevent this. There is an option for me that I can disagree with their decision and I may be able to convince them to keep it in line, but I'm not really thrilled with this card, but I'm probably going to keep using it so the availability doesn't drop anymore. I may change out when we have like a major issue and use this card versus the Chase, just to make sure that availability doesn't go down. We're very lucky in the situation now that we have built up reserves, and the best thing you can do is to run up those balances and then pay them down monthly or twice a month so that those balances don't show high through any period of time. And again, try and at least pay them off by the end of the month so that you're not spending tons of money on interest. Also try and move those high interest credit cards over to long-term rates, such as an SBA unsecured loan, or if a bank offers you a short-term loan with fixed payments at lower interest rate, maybe 3 years, it's much better than the long-term paying credit card interest rates. So where we go from here, for now I don't see things improving in the near future. There is record high inflation, no workers to be found, and shortages everywhere. But as a country, we've been through far worse situations, and I believe we will be better in the future. Thank you for taking the time to watch this video, and I hope it gives you a better idea of how to keep your credit lines open and available. If you have any other business questions or money questions in general, post a comment below. And if you think of a business that can benefit from this information, please share this video with them. I wish you the best in your business, and until next time, have a great day.